Alright everyone, Cowboy Trades here, welcome back to the channel. So yes, you read the title right, here we go again. Another crypto lender called BlockFi has just filed for bankruptcy under Chapter 11. How is this going to affect the price? What's my next price target for Bitcoin? And what's the rest of the news in the markets? Well, let's dive right into this. So, like we said, crypto lender BlockFi has just filed for Chapter 11 bankruptcy. They have at least 100,000 creditors and they owe them liabilities of up to 10 billion. Now, before I continue, comment down below, how much money do you think they've got on their balance sheet to pay off this 10 billion? Don't cheat, pause the video, comment down below. Let's go find out. It's 256.9 million. No wonder they filed for bankruptcy. So, we talked about this about 12 days ago, actually. We said, once FTX goes bankrupt, we're going to see lots of exchanges slightly smaller underneath it start to pause withdrawals and become insolvent. And then these exchanges are going to go bankrupt, like Gemini was pausing withdrawals, and you're going to see cryptocurrency exchanges underneath that go bankrupt. And this is one of those exchanges that was, in the middle / underneath that has now filed for bankruptcy. We talked about this 12 days ago. We talked about this 4 months ago when the whole Voyager thing came out. You can look at the channel. I've been warning you to get your crypto out of these exchanges because when the prices of the cryptocurrency markets go down, you're going to soon find out a lot of these cryptocurrency exchanges and lenders, they don't actually have all of your money. So, definitely get a hardware wallet. Let's move on from here. There's not that much news going on in the crypto markets today. We do have a couple of news events to cover before we do dive into the Bitcoin charts. We have just had a FOMC talk from Bullard, and he's once again come out with some pretty hawkish stances on monetary policy. He basically said the markets are underpricing the risk that the FOMC may be more aggressive than anticipated. And he also said that the Fed may have to keep rates higher through 2023 into 2024. Bullard is also one of the ones that is saying we need at least a 5% US interest rate, and it should probably push higher. Now, in terms of the rest of the week, over on Tuesday, we have a consumer confidence report. I'll let you know about the results of this over on my Twitter. So if you do want to follow me for more economic data, be sure to head over to @618_cowboy. And over on Wednesday, we're going to have our next US quarterly GDP results. So once again, follow me over on Twitter @618_cowboy. If there's any important economic data coming out, that is the first place I will post it. Now, moving on, let's talk about the chart. So I'm really going to zoom through these because if you have watched my channel in the past week, you got a 17-minute on-chain metric update and you got a 15-minute TA video. If I'm being completely honest, there's not a whole lot to update, and you know me, if there's not a lot to update, I'm not going to waste your time. I'm going to zip through these so we can talk about something else in another video. Now, first of all, starting off on the daily time frame, you can see, once again, Bitcoin is in the same bear flag that we highlighted in our previous video. The EMA ribbons on the daily time frame are currently residing at 17,100, and they are dropping pretty quickly. In fact, they're down about $300 since we last made an update on this. So, in the next few days or so, we can definitely see the EMA ribbon starting to capitulate beneath the 17,000 zone. It also looks like we are losing a lot of momentum as we are coming up to the top of this bearish pennant. More about momentum indicators in just 1 second. Now, if you've been watching the channel for a while, you may remember roughly about a month or two ago, I was talking about how I foresee an incoming liquidity grab. Now, basically, we were at these kind of levels and we said, hey, we don't have enough momentum, we don't have enough bearish news, we don't have enough volume coming in to push us down to lower levels. So how are market makers going to look at this market? Well, they see volume profiles up here, they see a huge book depth in terms of the buy orders and sell orders. What happened? Price pinged up to the volume profiles, bulls got bullish, 21,600, we're going on a bull market, right? All the bulls put their liquidity in at these levels and boom, we absolutely capitulated down to new lows, which I'm sure you all know we made about a week or so ago. So in terms of this higher time frame liquidity grab, market makers seem to want to pull us up, grab liquidity and push back down. You can also see something a little bit similar in the lower time frames. Obviously take this one with a grain of salt because this volume profile is much smaller than the one we've initially looked at over here, but nonetheless you can kind of see, there's not much volume accumulated while we are breaking down into new lows right now, and a few times we've kind of pushed up, grab liquidity, pushed down, pushed up, grab liquidity, made a lower low and pushed down. You can also see It's probably easier to show you over on this chart if I remove everything, but everything looks very M-y right now. You've got an M pattern right here, which broke down, and now you're making another M pattern. It's not like you've got a textbook clear M pattern into a neckline, into a breakdown. What I'm really highlighting is, you've got M-iness and M-iness and M-iness, and you can, draw a plethora of different M's from a plethora of different regions, which is normally not a good sign for the market. So, like I said, we pinged up to this 16,500 region, and in my last video when we were talking about Bitcoin TA, we were talking about, not going to mention any names, how some retail traders were once again getting bullish as Bitcoin was at 16,000. That was pretty much your short signal. I say short signal as a joke because at this moment in time, I'm currently not trading these markets. I'm really sitting on the sidelines. If you've been watching the channel, we made about a 2.8x return on the most recent Cadena trade. We made another trade on Bitcoin which was about 30% in the profit. And since then, as we've been in these new lows, I've been telling you my DCA plan, I've been telling you I think we break lower, but I'm also on the sidelines until a position of strength presents itself. And really, there's not any major positions of strength. I wouldn't feel, 100% confident going into any trades right now, which is really why I'm observing the markets until we have that next breakdown to the downside. Now, one other thing that you might want to point out is that, since the 9th of November, we've came down to the 16,000 region once, twice, 3 times, and we're coming down for the 4th time. This area also, you can see candle body closes right here. Why have we stopped at the candle body closes? This isn't exactly 16,000 on the dot. Why did we stop here? Well, boom, 1.236 Fibonacci from this 17,600 low all the way up to this high. This was one of our first macro price targets, and we have, bounced, and we're weakening while we're in this bearish pennant just sitting above the floor. Roundabout, call it 16,000. Technically, I really want to see 15,800 have a daily candle body close beneath. I think as soon as we have that daily candle body close, we start breaking down into lower levels. Now, in terms of your Fibonacci's, if we do have that close beneath 15,800, we could potentially see in the macro time frame about another 18.5% move to the downside, or from where we're at now, a 20.5% move to the downside to round about this 13,000, 12,900 region. Now, why is this not my price target in the immediate short term, but why have I got my eyes on this in the higher time frames? Well, because I like fibs. I think this is a good target. 1.236 bounced very well. This is my next macro price target. I don't think we're going to be down here next week unless we see a bunch more exchanges go bankrupt, which isn't out of the question. Like I said, we've been talking about the possibility of this for a very long time on the channel. But that being said, what is my next area of open interest? Where do I think we're going to come down and bounce from in the immediate short term? Well, let's zoom out on the chart. You can see above this 14,000 range, you've got blow off top in 2018 that you literally established no trading history around. You've got a tiny touch point at 14,000, and then above that you can see, weekly time frame, we just ran up in a straight line and did not build, any type of support around these areas. So, I mean, technically, if we drag this out, the most amount of area traded was just here. You've got candle body closes at 14,000. You've also got, a couple of touch points here, rejection points here. You've got touch points here, rejection point here, rejection point here, rejection point here, flipped as support here, broke back down, retested a support, confirmed a support, broke back up to the upside. So, I mean, look, this range down here is clearly, in my opinion, the next area we should be focusing on in the immediate short term. I almost feel like 14,000 is going to be a huge psychological level. It is a round number, not as round as something like a 15,000 or a 10,000. But in the immediate short term, this 14,000, where we have, had a rejection point all the way back on the 24th of June in 2019, I think without a doubt, this is going to be the next area we're going to be magnetized to. And if you are looking at the volume profiles, let's look at where we're currently sitting at right now, between about 15,300 all the way up to about 16,000. This is basically, the 16,000 floor, which, as you can see, once again, daily time frame. If we zoom in, this volume profile is what we're holding now in terms of where we're at as of the time of recording this. We're sitting on this volume profile. If we look at where we were a few days ago, we found support at the 1.236 Fibonacci. Before that, 1.236. Before that, 1.236. But we did break to the downside of it, and when we did, we made sure not to take out the floor of the volume profiles at 15,300. However, with momentum indicators pushing down, which I will talk about in just one second, I think it makes sense that we're going to start losing this volume cluster and heading down to, what do you know, the next volume cluster down here at 14,000. So in terms of where I think we're going down to in the short term, I've said it about 10 times now, 14,000. I think we've got about another 13.5% drop to the downside. And could this happen in the next 2 weeks? I definitely think it's very, very likely. I'm going to make a stock market video very, very soon, potentially today. If not, I'll try and get this one out tomorrow, because there are also some very, very worrying signals that I do see in the stock market right now. But for this video, I kind of just wanted to focus on the crypto news and, you know, get this out as quickly as I could. So yeah, in terms of the next move to the downside, it is 14,000. So we know the trade. We know where Bitcoin's moving to next. Let's look at the oscillator so we can get a good idea of when we should be expecting this momentum shift back down to lower levels. Well, let's start off on the money flow index. On the daily time frame, you can see since the 29th of March, boom, 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 and once again the other day, boom. Like we talked about, we came and rushed in to the money flow index, which is basically like the RSI, but it also takes into account volume overextensions, how much volume's in the market. And a lot of the time, the MFI will tell you better than the RSI when we're ready to top out. And in my opinion, we are now ready to top out for Bitcoin. Bitcoin has just run into the money flow index. Like I said, I'm a very conservative trader. I like to short from positions of strength. I would not be shorting after this massive, massive run to the downside. However, you know, if we come over to something like, I mean, to be honest, weekly time frame is so far-fetched from where we are right now. If we do have a, you know, fake out maybe to 18k or something like that, I'd be pretty happy to open a short. I just don't think that we're going to go up to the upside anytime soon. I find it kind of likely we're going to chop sideways and be a little bit boring for maybe a day or so, and then I think as we come down to 15,800, we are going to rocket into new lows and come down to that 14,000 that I told you about in the immediate short term. So momentum indicators in terms of the money flow index, we're definitely running into that area where there's not really that volume to support the market anymore. And on the daily, you can see we've got a bearish engulfing volume candle. And since when we made new lows, you know, bulls tried to come in the next day, but ever since then, you know, bullish volume has been diminishing, and we're starting to see that bearish volume stack back up again. Let's get rid of the volume. Now, over on the squeeze momentum indicator, we talked about this the other day, how I said, you know, in my opinion, it's not necessarily time to short right now while the squeeze momentum indicator is going up. But wow, the squeeze momentum indicator is going up and resetting, and price action is being pathetic. I mean, look at this. Squeeze momentum indicators going up, but the price is going down. This is definitely a sight to be seen. It looks like I said in my last video, I really think something like this is going to happen where, yes, we're resetting some of the momentum, but I don't think we're going to make it back up to the heart line. Or if we do, I don't think we're going to flip bullish into bullish territory. I really think we're going to come back down to the heart line and then come on another bearish trend like this. And, you know, if we start seeing more exchanges going insolvent, etc., this could definitely be another nasty run to the downside. So a lot of our oscillators are looking topped out. The stock RSI on the daily time frame is now starting to cross and capitulate into bearish territory. When was the last time that we topped out? Well, let's see. We actually came up to 97, so we had a higher top than back over here. When was the last time we were this overextended? Well, we topped out over here, and we had a move from about 20,000 down to 19,000, so about $1,000 drop. Then we pushed up very temporarily back up to 20,500, and then pushed all the way down to about 18,200. A lot of the time though, you can see, you know, when you're at your tether's end, when you're kind of, you know, forming bear flags or something of the sort, you get these flips over in the stock RSI, like right here, if you don't know what I'm talking about. Because I can see it in my brain, but you might not be seeing this. So over here, you can see, you know, bearish flag, bearish pennant, whatever you want to call it. You come up to the top of a range like this, and, you know, you kind of run into that resistance in the money flow index, and boom, you know, you have a really, really nasty move to the downside. I think we're in a situation very similar to this, because you can see, you know, breakdown, bear flag, another nasty breakdown, and over here as well, you can see, you know, another bear flag that topped out quite high. This one was actually up at about 100, yeah, literally 100 over on this this stock RSI flip, and boom, bear flag all the way back down to the downside. And like we said, which chart was it on? I mean, you can really eyeball this, but, you know, we're once again forming another bear flag. If you're wondering where the price target of this is The bearish price target is down at 11,300. The conservative price target is currently at 12,000. Do I think we're going to go to either of these price targets in the next few weeks, in the next month? No, I'm just letting you know the price target. But nonetheless, like I said, I mean, it's going to be a really quick TA video for you today. I've given you all my thoughts in the past week or so. I gave you my technicals. I told you what the whales are doing. We looked at on-chain metrics. We looked at active addresses. And, you know, in terms of all of that, nothing's changed. But in terms of what we covered today, momentum is looking a little bit more sour. We're still in that bear flag, but things are looking pretty dire right now. And we've had some more bearish news come out. And there's definitely some news that we do need to take into consideration. Like, for example, the consumer confidence that's coming out tomorrow, or the GDP that is going to be coming out on Wednesday. But I'm going to wrap up this video here, my friends. That's all I really wanted to talk about. I am going to get another stock market video out very, very soon, because I do see something extremely important happening in the stock market right now. And also, it's been a little while since we've looked at our 2008 SPX fractals, our 2008 VIXs, our 2008 NASDAQs. We're going to look through all of that most likely tomorrow. But for today, that's all I've got for you, my friends. As always, if you do enjoy the content, hit that like button, comment, turn on notifications, hit the subscribe button. YouTube loves all of these engagement in the videos, really helps out the channel. So thank you, cowboy out, peace.